So I definitely think we're going to see a bounce in gold and miners. And if we are going into a true complacency rally for the stock market, gold miners should perform really well. So that's kind of where growth stocks are, and they're back down at a basing formation. But when we look at this complacency rally area here from the broad stock market, I think we are just about to start this complacency rally in stocks. And I think this is a great opportunity for potential trades that could last several weeks, several months, and growth stocks perform very well during this. Now, it might be the last chance to take advantage of them before we roll over. And I think we're going to enter a much bigger bear market. I think we just scratched the surface of the damage that could be done. But that's kind of the high level of where we are kind of in terms of the market. We're seeing growth stocks come back to life and starting to outperform defensive assets. And that is a sign that big money's starting to rotate back in, and there could be something with momentum behind it.
Chris, isn't this a very risky trade? If you mistime this complacency rally, you're basically buying at a high, and you're just in for a ride down. It's basically what that chart shows. How are you? So how are you positioning yourself, and how are you? Are you basically how are you timing this?
Right. So I'm it's kind of confusing. I get it because I'm mixing up kind of long-term trends with short-term trends. So from the stock market standpoint right now, it feels like we are right here on this chart, and we're about to start a new rally to the upside. And when the stock market goes up, almost all stocks go up. And if the stock market's going up, you generally want to be in the stocks that move up the most. And those happen to be growth stocks. So we are in that phase right now where growth stocks should come back to life for a bounce and a rally here that lasts a few months. And then I think we'll see everything roll over, and it'll be a whole new game changer going down here. So the reality is the tide is about to go up, and the tide lifts all boats. So you want to get positioned into the sectors and the stocks that are going to rise the most and have the most upside potential. And growth stocks are showing signs that they want to lead, they want to take off again. And so this is an opportunity. It's not a buy and hold opportunity by any means. This is a trade. It might last a few weeks, it might last a few months, but there's a lot of upside potential. So that's why I'm saying, the broad market's going to bounce. We want to move into the best sectors or the best assets here while it's going higher.
What's your upside target? How much in gains are you looking to take in before you exit?
Yeah, it depends on the play. So for example, one of the trades that we're in right now is QLD. And so we've already pulled some money off at a 6% gain last week. And I think there's potential for about a 15% rally from where we got in.
Right.
So there's some pretty good upside. After that, it's going to be a 20% upside target. And QLD is the NASDAQ 100 ETF. It's the 2 times leverage. So we're looking for roughly a 20% move. We got long last Wednesday at the opening bell. So we're looking for, which would be a 10% move in the stock index. So it's a pretty substantial move. There's a lot of opportunity here. It might only last, a few weeks, but it could work itself out over several months and kind of drift itself higher. But there's a lot of opportunity that we want to take advantage of in this type of bounce.
Let's talk about gold finally, Chris. Now we're almost at the key psychological resistance level of $1,700 today. As we're speaking Monday morning, we're at $1,726, and it's just it's been a steady downtrend. It's been a steady, I wouldn't say roller coaster ride. I would say one of those carts going down the hill. Off the side of the mountain, you see these scenic things in Switzerland, and if you go on Instagram, you'll see these people going on these carts down the side of the hill. That's kind of like what gold's been doing. It's not hasn't been a very dramatic move, but it's just been steadily declining. Is this going to end anytime soon, or what are the charts telling you?
Yeah, you look at the chart. I mean, we've got this blue line across here. This is a very significant support level. Going back in time, I mean, major highs here turned into major lows, double bottom, another spike bottom, and we're back at this level. So we're at really strong support. The only thing that gives me a little bit of concern is technically when you hit a support level for the first time, you usually get a knee-jerk reaction bounce, a reaction high. And that's what we had. And that was also happened to be right off the ECB was doing their rate change. It created a pop in price. So we need to see if we're going to get some traction. But for, when you look at it technically, this is support. From a long-term investor standpoint, this is a level that, adding to your stack is an opportunity. We're not out of the woods by any means for gold. We need to see it start to make a series of higher highs and higher lows over the next several weeks. If it could just work itself up or build a base here, a nice clean base of sideways price action, when it pops above that base, that could be the start of a new uptrend. Mm-hmm. So I definitely think we're going to see a bounce in gold and miners. And if we are going into a true complacency rally for the stock market, gold miners should perform really well. They tend to become a market leader. And right now they're at the bottom of our ban hot list, our best asset now list. They're one of the worst performing sectors, but they could come back to life very quickly and become a leader for, 2 or 3 months. So we are, right at this amazing tipping point where growth stocks and I think precious metals and miners could take off. The stock market will move higher. And it's going to be a great opportunity for, I think, a couple of months here.